Hello guys, welcome back again for another in-depth guide about trading. So we would like to cover this one up about positional trades and in-depth guide about inducement order blocks and high probability order blocks. So first things first, let's show the drawings and there you go. So in order to find a high probability order block, so let's talk about this order block theory about the ICT. First things first, we need a major high and a major low. So how you define a major high and major low? So let's say this one, this is the major low and this is the major high. Price starts to make internal structure. So make a break structure below, touches this support zone and rallies. So when you see this kind of move, it always happens every time, like bullish or bearish. So when you see a failure swing and a breakup structure, that's a minor chalk because you want to see this one getting broken, and that's a major chalk. So we're talking about the order blocks, not the major chalk or minor chalk. So in order to find a high probability order block, this is your support zone, this is your resistance zone. The support zone has its own unique characteristics like what? Fair value gap, mitigation block right here, a rejection block, and this one is an order block right here. Let's just imagine this is an order block. So in order to validate an order block, you need to find the recent high or the recent low or the recent major high and major low and look at them and how it's broken. So let's take an example right there. This order block under beneath this one. You can see the price makes a leg, makes a pullback, traded to this, traded something right here and this PD array or a fair value gap. That's a small fair value gap right there. Goes down, close this below this candle, and what do you see? A break of structure. So we could call this one as a major high again. This is the new zone because it broke this one below and closes below it. Broke and rallies. And you see right here, this is not a validated order block when the price doesn't break the structure. This major high right here, like this one. So you see the price rallies, making a minor chalk, a 4-hour minor chalk, a 4-hour minor chalk, and a 4-hour minor chalk. And then creates a zone of what? Order block. So why I see this as not a valid order block? This one. Why I see it as not a valid order block? Because of what? This is the major high, this is the major low. Internal structure. This is an internal structure. Remember guys, this is a daily time frame, so this would give a huge impact to our trading strategies. So as the price rallies again, creates what? Breakup structure. So what do we just see right here? Order block because of what? This one. Breakup structure right here. Rallies. And then they think, okay, this is the new high and this is the new low. Without knowing the left side is what? The major high right there. We cannot consider this as a major high unless it broke this one. So it creates a market structure shift and declines. What happens right there? This one is an inducement zone. How would we define order block or an inducement order block? So inducement order block oftenly happens on where? That's an internal structure order block. Below it is what? Below the inducement zone is a liquidity pool. So when you see the price would make something break of structure, and didn't even bother to break something like a major high or major low, expect that's an inducement. That's a target. So the price target is one, boom, turtle soup or liquidity sweep. Look at how beautiful it is. Trade this one. You can use this one as order block because these are two consecutive blow candles, and you can use this one as an order block also, but I want to use this last candle right here. So I'll surprise rallies again. Boom. What's this? I make it on a red. Why? It doesn't break this major high. It doesn't break this major low. Inducement zone. Or retail would see this as an order block again, but it's an internal structure. Rallies, breaks the structure, breaks the structure, remember, it breaks the structure again. Declines, boom. And why I see this as what? As a red candle. It's an X. Because of what? How did you notice that I turned this into red? Because this one would be the new major low. And this would be a new major high because what? It broke a major high, creates a major high, creates another major low. Why I see this as an inducement zone again? See that? See that? Relative equal lows. This is how I hate order blocks. Like if it's getting retested again, like 2 times, I know, like there's a PD array order block right here. So when I saw the price creating equal lows on this order block, I would expect something, a turtle soup again, a liquidity sweep, because that's how strong the market is. When you see like this is a time-based liquidity equal lows, then what happens? It rallies here, failure swing. When you see a failure swing like this with a huge or long wick, what would you expect? A fair, a, let me give you a context again. An equal lows with a failure swing right here. Also turtle soup this body right here. Expect a turtle soup in this one. The price would likely to go raid these two candles right here because they know a lot of stuffs right here. Hedge funds know it. You guys don't realize something about it, but I realize it. When it creates a failure swing right there, expect this one will be the next target. That's how you identify the order block or high probability order block. So let's rally again, and it rallies, and then what? Creates a liquidity pool, a PD array, unmitigated PD array right here. What you see this? What did you see? Resistance zone turn into support zone because it's broken. Turn to support, holds, and boom. So I call this one as what? Yes, it breaks a structure, it closes above, break of structure. Remember, you can use this as an order block, right? This one, this 2 candle, this 3 candle, or this 4 candle. Why I want to say this one is an order block also. Look how it works. Opens, close, opens, here, making low, high close. That is considered as order block. You can really understand how it works, but this is also a 4 consecutive down candles, but this one is a high close. So I use this one as an inducement order block because of what? Retail resistance. Retail support. Right here, a retail support. Liquidity pool. Remember that. Equal lows right here again. Equal lows. I know that. I know it because of what? What do you guys realize about this one? We have a liquidity pool right here. You can see this one. Ooh, it turtle soups the body. It makes an equal high. But I want to see something like this one. I want to see this one getting wrecked right here. Consolidates. Another impulse high. Breaks a slow. Now we're entering the sell model of the market maker. That's how I want to see, or it just rallies again, or like target this one right there. Right there, this liquidity pool right sitting in here with an equal highs, so that's a strong liquidity pool, but I don't seem to care about that. Like, I don't seem to care. So we're talking about we're done about this order block theory, right? So let's take a look about the positional trades I want to share with you this time. Here we go. If the data range. This is an if the data range right here. So let's update the price. And what you guys see. 60-day look back. What you guys see. The last liquidity pool, right? The last liquidity pool. Then what happens? That's why I've been created this one, liquidity pool, liquidity pool, liquidity pool. Because after this one, it will taken out. What you guys see? It would make a new range right there. A new major consolidation. We all know ICT, this is a market maker model series, right? We would start a new major consolidation. Rallies above here, taking these sell stops, these stops right here. Buy side liquidity, targets this one. Failure swing. If it breaks, positional trades. Take this as a positional trade. Make your entry right there. Don't enter right there. It's dangerous because it could go up, or it's a double sweep method. I want to see a break of structure in here. Closest below this one. Create a displacement. Positional trade right there. Put your stop loss above here, just for the safety. So now what? The market would start to what? Target what? Liquidity pool. 60-day liquidity pool right here. These order blocks, these equal lows, this what? Inducement order block. It would start to make a new range and target again. What's the target? Sell side liquidity. If it would enter a market maker sell model. If this gonna make a range again, right there, and touches this order block or this PD array right there, and rallies, so expect something that this is not a sell model, because a sell model will make a impulse high, impulse low, failure swing, break of structure. That's how a sell model works in a nutshell. Like, so the if the data range is now moving, because this the interbank's algorithm needs to move quarterly shift from down to up. That's why I'm preparing this one. I'm so prepared at this one. I do positional trades, swing trades on this one. I can do three of those: scalping, positional trading, and swing trading. I can do it. I can do all those. I can do it. So this one is a target. If this one enters a sell model right there, target, target, target. But I want to target what? Liquidity pool, because I know that would be the very target, not the order blocks. Under the order blocks is what? Liquidity pool. Under the order block, liquidity pool, liquidity pool. So this is crucial when, let's just take it off right there. This is so crucial because we're entering the December, so we all know it will consolidate and it will be expanding on January, I guess. So let's be patient. But I want to see the market maker sell model right here above here, or it would target this one, but it would rush towards it because what? We are on a deeper premium right now. maybe some news, would like to rush this one, weeks to it, traded, because there's no reason for price to stay like this one. We are on a deep premium. If this rallies again with a sharp move right there, expect that's a liquidity sweep. A sharp liquidity sweep. Wicks, or maybe some consolidation and enters a sell model. There's no reason for price to go up here. There's no reason for it. Market structure shift. So if you hear something like fake news, don't listen to it. We're only using the IPTA data range for this. Remember guys, take your 25% partial, 50% partial if you do positional trades, and this would be 100%. You can use this. You can take partials right there, right there, right there, right here. But I want you to take partials 25% and what? 80%. This would be your 100% or your take profit. I don't care about this. So that's all. Hope you guys understand my words and happy trading.